Standout sector off the April lows, as you know, gaining more than 16% on the back of Nvidia's relentless run. But is that rally running out of steam? Let's ask FirstMark Capital's Rick Heitzmann. He's here with me at Post 9 as well. I'll pivot this way and see you.
Sure.
Welcome back.
How are you?
You look at Nvidia. You've been in the tech business a long time, investing in these kinds of names. Your reaction to this relentless run, as we said, is what?
They see incredible fundamental demand. Their numbers are incredible. They continue to put up numbers, even at scale. And what you're seeing is, so far, there's no end to the appetite for AI infrastructure. And until we see that infrastructure overbuilt, I don't think that demand is going to diminish.
So analysts keep taking up their numbers,
yes,
right? They keep taking up their estimates. I was with one tech investor, notable tech investor yesterday, who said their numbers are 40% above the streets.
Yep.
That's the amount of optimism that remains in this name. Is it all justified?
I think some of it's justified. I mean, this is going to be a year, and we've talked about this before, that 2024 is a year where the chickens come home to roost on AI. So Nvidia is building out the infrastructure. There's going to be some tooling, and there's going to be some applications. Are those applications going to be able to be delivered, and are they going to be able to deliver value for their customers, either enterprises or consumers? And as long as that continues to happen, people are going to have almost insatiable demand for Nvidia. The thing that would not happen is if you see ChatGPT fall off, you see Microsoft Copilot fall off, you see a slowing in funding of the thousands of AI startups who are all in the market buying infrastructure. When that starts to turn, it's going to be similar to what happened to Cisco 25 years ago when the demand slowed for infrastructure.
Is that how much on a 1 to 10 scale of worry in your mind? Where
a 3.
Are you on that?
I'm a solid 3.
That's it.
I think that these applications are able to show real value. A lot of companies that we've invested in and we've seen are able to show real value, a real ROI for the enterprise by automating workflow and doing jobs. And even the beginning on the consumer side of AI being able to do jobs. So we're confident, at least in the first couple innings, that it'll be more than incremental and will fuel this growth.
Do you look at the periphery of the key players like the Nvidias and say, you know what, the halo effect that some of these other names have gotten is just too much and it needs a correction in and of itself? How do we look at these other names that have gotten the Nvidia bump and maybe don't deserve it as much?
I think Nvidia is a one-on-one company. So they don't deserve their, kind of like Nvidia, and therefore should be trading at a slight discount to Nvidia. I think that's a false flag. I think that Nvidia is a one-on-one company. There's other companies which are benefiting from this incredible demand for AI infrastructure, but they shouldn't be in the same conversation if you think about multiples or if you think about potential market size as Nvidia is.
You look at software versus chips. Chip names have done quite well. Software names have been a little weaker. The thought being, well, all of the CapEx that's being spent by the hyperscalers, the mega cap companies that we talk about every day, is going towards the chip names rather than some of the software names. How do you view the difference between the two spaces, one going up, one going down, and the kind of investments that you yourself would be looking to make in the future?
So I think if you need the chip makers to build out the infrastructure, there's another layer of data models, data enablement, and we've talked about the Databricks, Data IQs of the world in the past that enable then the application layer to do its job, and whether that's workflow around enterprise software or consumer software. So Nvidia needs the application layer to thrive in order for there to continue to be demand, because that end user demand is what's going to drive demand through that whole activity chain and through that supply chain and infrastructure. So we think there's a timing factor, and as private market investors who are focused on the medium and long term, we're investing heavily in the application layer with the expectation that the infrastructure and foundation of this next generation of artificial intelligence will be built out.
Unless you're an idiosyncratic story with a great story to tell, not every company that you've invested in, by the way, is an AI-related company. But do you need to be to capture the imagination, to be in the zeitgeist of where everything is being talked about? If you don't have AI as part of your play, are there enough dollars to go around to you?
If you're a GLP-1 company, No, but besides that,
which you are an early investor in.
Yes.
All right. So you talk in your book a little bit.
I'm joking.
So.
But
Well, you don't need to joke. I mean, it is actually, it's one of the other areas, right? The one part of healthcare that's done really well. GLP-1,
which has great fundamental demand and a fundamentally new way to think about the world. But I think every company we look at has some facet of AI. If you're not writing software today, that you're using AI to help you write that software, AI to help you check it, load balance it, and deliver that software, you're going to lose. And a lot of the bets we're making on the earliest stage technology companies are companies that are saying, hey, I'm going to look at this facet of software, supply chains, CRM, logistics, but we're going to superpower that using AI. We're going to need less people, and we're going to make better, faster, stronger software. And that's going to be the next generation, leaving behind folks who have not invested in AI.